Bitcoin's a $2 trillion asset, and so it'll probably take immense sovereign buying for it to 5x from here. Whereas Solana could 5x by year end, people are willing to pay a premium to access crypto in the form of a familiar equity security. We own over 110 million of SOL. You're looking at Solana having this huge upside potential, this really large and vibrant ecosystem of users, developers, and dApps, and it putting up like the best metrics of any chain that we think will only continue to grow.
GM peeps, and welcome back to SolanaFloor. So we've been on a bit of a side quest these last few weeks to map the ongoing SOL Treasury vehicle arms race, in which there appears to be about 3 winners so far, which could of course all change overnight. So we've already spoken with Sol Strategies and DeFi Dev Corp, and today I'm excited to announce that Brian Rudick of Upexi is also joining us to deepen our understanding of how Upexi is different, how our institutional counterparts, the men in suits, now view Solana after the most recent period of meteoric growth. So I'm excited to pick Brian's brain about treasuries, why it's bullish for the ecosystem, and hopefully get some alpha as well. Brian, GM, and welcome to SolanaFloor.
GM, thank you so much for having me.
Absolutely. Brian, before we dive into Upexi and the recent success that you guys have had with the raise, bringing yourself onto the team, accumulating, I think, close to $100 million of SOL, I want to get your high-level reasons for being super, super bullish on Solana. And on a personal note, I'm curious if your thesis has changed in any material way since November when you gave that BBC interview and you sort of explained your thesis of the industry as a whole.
The thesis has not changed. I moved into crypto full-time 4.5 years ago, and it is because I believe that it will take time, but will eventually be ubiquitous. That is because crypto offers so many use cases and benefits that other technologies just can't. And so, like I mentioned, it'll take time, but this is where everything is going. And then what I'd say is, like, for us, it was a pretty easy decision to want to have Upexi be underpinned by Solana. I look at things as almost a spectrum where you have Bitcoin on one end as the best monetary asset, and you have Solana on the other end as the best high-performance blockchain. We could have built the company around Bitcoin, but a couple of reasons we didn't. One is Bitcoin's a $2 trillion asset, and so it'll probably take immense sovereign buying for it to 5x from here, whereas Solana could 5x by year end. And then the other reason is there are literally 20 different Bitcoin-based like MSTR copycats, and we'd rather be the canonical Solana Treasury company than like the 21st Bitcoin Treasury company. And then just kind of getting into Solana-specific reasons. I mean, I can jive on this all day, but like, just to get into a couple, like it has Lindy, it's been around for a while, so probably will continue to be around. But as one of the first second-gen smart contract blockchains, it has accrued all these network effects, and you're seeing that resonate in like this great ecosystem of users, developers, and dApps. I think it had a really intelligent go-to-market strategy, so it optimizes for what people cares about, which is speed and security, and then it grows into decentralization. It has this great user and developer focus, and you're seeing that emanate in things like Blinks, token extensions, SPs, commerce and gaming tooling. I'm a big believer in Opos, so it is the home of AI agents, deepen, meme coins, all these things. And then the other thing we liked about it is just the value capture thesis. So as a monolith, you capture value from all 4 functions of a blockchain versus something that's modular where, if you look at ETH, there's this whole big debate as to whether L2s are parasitic to ETH value capture itself, and you don't really get that with Solana. And so kind of putting that all together, you're looking at Solana having this huge upside potential, this really large and vibrant ecosystem of users, developers, and dApps, and it putting up like the best metrics of any chain that we think will only continue to grow.
So I want to talk about the core strategy here then. It seems to be raising from capital markets, capturing the spread, and acquiring as much SOL as is humanly possible. But I'm curious, how do you explain that thesis, which to me makes absolute sense, to some of the institutional investors out there, the TradFi veterans, the quote-unquote men in suits? How do you go to them and say convincingly, this is the right thing to acquire with leverage, and this is why you should give me money?
Yeah, so this, maybe I'll back up. So I spent a decade on Wall Street, mostly managing funds for Citadel, Millennium, and Balyasny, some of the largest hedge funds. And I actually covered banks, which are balance sheet businesses. That's what this is. And so I was actually able to really internalize where all this value creation comes from. And banks trade above book value, and when they issue equity above book value, it's by definition accretive. And same thing for us. And so I think that a lot of this, we actually have like multiple value accrual mechanisms. We could buy lock SOL at this discount, which has built-in gains for shareholders as it moves to par over time. We're obviously staking our treasury and turning it into this productive asset. And then I think a lot of the real magic comes from this intelligent capital issuance, which is probably deserving of more explanation. But a lot of these digital asset treasury companies are actually trading at a big market cap that's much higher than what the actual value of the underlying digital asset that they hold is. People call it MNAV, people call it the premium. In my mind, when the market expects strong future returns of the digital asset, it's absolutely due. This is for a couple different reasons. One is people are willing to pay a premium to access crypto in the form of a familiar equity security. This is people wanting to just buy it in their Schwab account. And you saw this in Grayscale's GSOL. It's this closed-end trust that before it filed to convert to an ETF was actually trading at a 500% plus premium. I think it also emanates because people want access to these different value accrual mechanisms like buying lock SOL at a discount that they otherwise wouldn't get. And then it really emanates from the fact that we can use this intelligent capital markets issuance that otherwise folks in other vehicles like buying spot or buying ETF don't have access to. And so when I'll use MicroStrategy as an example, when they trade at 2 times, when they issue equity at 2 times underlying, they're effectively selling $1 for 2 or buying Bitcoin half off. And so MicroStrategy leveraged this to be able to increase Bitcoin per share 74% last year to create a $13 billion Bitcoin gain for shareholders. And so we are planning to do the exact same thing. And I think that's where a lot of the magic happens. It's basically this cost of capital game. And then we can leverage that premium multiple for the benefit of shareholders.
When you talk to these accredited investors and people from your TradFi days, what's the main concern that they have when you explain this very clear, concise thesis to them?
Very candidly, I don't think they're that up on crypto to where they know that okay, a lot of Solana activity had been driven by meme coins. I actually think that this is one of the huge benefits of Upexi and other digital asset treasury companies is we are out there singing the praises of Solana and talking about why it will be an endgame winner for smart contract blockchains. I've had calls and emails with literally 20 different sell side analysts, and we're just basically advocating for Solana. And so I think just raising visibility amongst institutional investors and corporates, I think is a huge, huge benefit. What I'd say is when folks ask about what the big risk is, I do talk about it being Solana, but then you can talk about either macro level catalysts or Solana specific catalysts that I think give them a lot of comfort. I always look at things in this catalyst versus risk perspective. And I just think there's so many more things that can go right and will go right versus the risks that are out there. And then I think the big thing is in my mind, the biggest thing always holding crypto back was unclear rules and regulations in the US. I think we're actually on the precipice of getting stablecoin bill this year, probably market structure bill next year. I think that this is so important, and this is a bit antithetical to crypto, but this is what will cause institutions to come in a big way. We kind of need that because it's institutions that have built in trust. They have billions of users. They've got billions of dollars to throw at it. They've got a lot of the top devs. And if you can imagine something like Google Chrome turning on a crypto wallet so folks don't have to download plugins, and then Amazon accepting USDC, you'd really see this step change in usage and functionality. And I actually think we could be on the precipice of the biggest crypto bull market that we've ever seen for that reason. And I think digital asset treasury companies and Upexi and Solana will be a key benefactor of that.
You mentioned that there's a lot of copycats over on the Bitcoin side, but here at the Solana ecosystem, you've obviously got Sol Strategies, DeFi Dev Corp, and Upexi leading this charge with a few of the sort of smaller names emerging as well. I'm curious in your mind what the biggest differentiator to Upexi's approach is, and why do you believe that only a few of these survive the coming shakeout?
Yeah, so you mentioned our peers. Big fan of what they're both doing. I'm rooting for them if they can kind of raise their visibility and have success and trade at 10 times MNAV. You better bet that's going to pull up our multiple. Also, if they're buying a lot of SOL, guess what? We own over 110 million of SOL. So that is obviously good for us. What I'd say that differentiates us is we're trying to do things in a way that maximizes shareholder value, but in this very risk prudent fashion. And so what I mean by that is we have almost no leverage right now, and we think like that is prudent. So MicroStrategy will only take on 20% leverage. We're dealing with an asset that's twice as volatile as MicroStrategy. And so we want to make sure that we're going to be around to survive all market environments. We're also acting in a way that we think is best practices. So we're using qualified custodians only. We're diversifying our delegation amongst different validators, things like that. And we think that is what is going to be particularly attractive to traditional investors. And by the way, it's the traditional investor TAM that is literally 40x the size of crypto investors. And so we think that this is a strategy that will resonate with both crypto investors and traditional investors alike.
On that topic of visibility for institutional investors versus some of the more crypto natives out there, the stock price has obviously performed very well. I think it's a 423% increase according to your website since the Treasury strategy was announced. I'm curious what you think the biggest contributor to that has been. Has it been some of these connections that you have with, TradFi sort of giants from your past life, or do you think it's been people rotating some of their crypto profits into buying the stock?
In my mind, the biggest thing is just us accruing a multiple on the SOL that we hold. And I think that folks are looking at MSTR, and so down a little bit from here, but trading at roughly 2 times. People are looking at Metaplanet trading at 6.5 times. A lot of the other Solana Treasury companies are trading anywhere between 3.5 and 6 times. And so I think then when we launch, folks look and say like, this is the way that the market should value it. And so I think like that was the big driver. In my mind, all these digital asset treasury companies have 2 different components. The first is visibility, and we're hard at work raising our visibility amongst both crypto investors and traditional investors as much as possible. I'm excited because you'll be seeing a lot more from us here in the future. We're hoping to raise additional capital in an accretive fashion to be able to procure more Solana and raise our SOL per share.
Let's say there's 2 treasury vehicles that each hold roughly $100 million in SOL. I'm curious why one of them would trade at a higher valuation than the other.
Yeah, so it's one of the big things is cost of capital. If you can have a cheaper cost of capital, you should trade at a premium. Another is like the risk inherent in your stock. So if someone has very significant leverage, you should obviously trade at a much lower multiple. And then I think like the visibility component is there as well, and just around like the quality of the company. And then what I'd say is it kind of cuts both ways. So you can make an argument like, I want to buy a company with a cheaper multiple if you think that that multiple is going to move more toward peer like multiples, or you can say like, hey, I want to buy the company with the higher multiple because when they go out and they raise additional equity, it'll be much more accretive for me as this existing shareholder. So I think there's no right answer from an investor standpoint as to which one is better to buy. Kind of just depends on how things unfold in the future.
And you mentioned leverage there. We love leverage in crypto land. The only thing we love more than leverage is getting liquidated by the looks of it. But I'm curious how you think about the right amount of leverage. You obviously don't want to overexpose the strategy to unnecessary risk. And as we mentioned, it's a volatile asset already. So how does Upexi think about the right amount of leverage?
That is a great question. I think we haven't disclosed exactly any targets, but what I'd say is we started off being fully equity funded. And what that means is SOL could literally go to zero and nothing would happen. Like we wouldn't have to sell any SOL at all. So I think that positions us well for any market environment. Like I mentioned, like one good comp is probably MicroStrategy. They've got, I looked, 42 billion of unencumbered Bitcoin, and still they will limit their leverage to just 20% of NAV. And so we're dealing with an asset that's twice as volatile. We probably will be out there issuing additional capital. We're happy to do that in whatever creates the most value for shareholders. So, whether that's just straight up equity, whether that's a convertible note, I think there is some potential to issue a convert, and then you can issue equity after and kind of grow into that. And so you're adding additional equity to pull down your leverage. But I think there's no right or wrong answer. All I'll say is like, we'll only be leveraged in this prudent fashion, and we don't want to take on too much, because if SOL were to fall to something like $80, we want to make sure like we're still around and our equity doesn't go to zero.
On this topic also, critics have called the emerging Treasury vehicles as potential cash grabs. And some people have warned that it could be a threat to Solana's ecosystem health. The flip side of that argument is that if it's done correctly, you've got all this capital that's coming into the ecosystem, buying Solana, and that's sort of net positive for the rest of the ecosystem, right? So how do we think about the risks for the Solana ecosystem in terms of Solana's maturity, the liquidity that's available, and the overall stability of the ecosystem? Is this ongoing Treasury vehicle arms race a risk, or is it inherently net positive for the overall ecosystem, do you think, in terms of maturity and stability?
I'm a strong believer that it is a huge benefit. I do see some of the concerns. There are other companies out there that are putting out billion-dollar shelves when they have basically no ability to buy $1 billion worth of Solana. And so I think some of this is a little bit of this cash grab and trying to push their stock price up. And then I also agree, like if folks are not doing this in this risk prudent manner and they're taking on too much leverage, that is adding additional risk to the system. But what I'd say is like there are these immense benefits for the token ecosystems from digital asset treasury companies when done right. And so I think these are really twofold. One is, if we're out there buying SOL and we have this buy and hodl strategy, in theory, that should push the price up. End goal is not SOL price, but I think like a rising price is good for attracting users, developers, and dApps. And then what I'd say is the second biggest thing, which is, the key one in my mind, is just raising the visibility of Solana. And here's where we can really help do this amongst institutions and corporates and traditional investors.
Clear. I want to switch gears a tiny bit here and sort of zoom in a little bit deeper into the Solana ecosystem. There's obviously this pump.fun announcement, if you will, the plans that they have to raise $1 billion at a $4 billion valuation, against the backdrop of them having made between $700 and $800 million already of revenue, seems to be dividing the Solana ecosystem. So it's divided along the lines of it's extractive, it's profiteering versus no, it's success. And I'm curious if this divide is also something that's felt with our traditional finance counterparts, the men in suits. Does it change the investment thesis in any way? Do investors, traditional investors, institutional investors, view the Solana ecosystem any differently as a result of the most popular, most successful, most profitable app deciding to raise $1 billion? Yeah, I'm curious what your thoughts are there.
Candidly, I don't think that they're that in the weeds quite yet. I've had a lot of conversations. Not one has mentioned pump.fun. And so I actually think that's one of the big benefits that we can bring. Yeah, so I actually don't think it changes their view of Solana yet. Obviously, if you take $1 billion and you ride off into the sunset and you don't work on pump.fun, it is extractive. But I'd like to give all the investors in this round much more credit than that. And I've heard a lot of folks talking about them looking to create or further the streaming service and like compete with Twitch. And obviously like streaming influencers are not cheap. And so I think we don't know their full plans yet. Obviously, if they want to continue to grow and expand, like that is costly to do so. So, and then what I'd say is like, I'm a big fan of pump.fun. I think like they've done this fabulous job for bringing users into crypto. I think that they've demonstrated that you can actually build this highly valuable and highly profitable company on chain. Clearly, like there's some nefarious activity happening, but everybody has this incentive to figure out how to do things in this provably fair manner.
So I get the sense that it's not necessarily something that's going to impact a publicly traded company's willingness to buy more SOL, unless, as you said, they take the billion and sort of ride off into the sunset.
For us, no. There's so many things that you can do on Solana that meme coin trading is just one of them. And so even when things happen, like we saw earlier in the year, I think that is kind of what you get when you have this permissionless open system. But there are all these benefits and so many wonderful things happening that doesn't change the thesis at all.
Let's imagine a scenario where pump.fun launches its own L1 rather than sailing off into the sunset. They launch their own L1, and of course this has the adverse impact on the Solana ecosystem of draining liquidity away. Clearly this would be a problem given the pump.fun's been one of the highest revenue generating sort of apps in the ecosystem. In that scenario, does a pump.fun departure change your investment thesis around Solana? Given that you're a lot more familiar with some of the sort of traditional investors that you're talking to. Yeah, if pump.fun leaves, would that change your investment thesis? Would you then start to think, oh, maybe I should be acquiring Sui or Aptos? So other digital assets into the treasury, or would you still think, no, regardless of what happens, $1 billion is $1 billion, my thesis of Sol remains?
Our thesis of Sol is not changing. We're Sol only. We are a buy and hodl only strategy. We are not considering buying any other tokens. And then what I'd say is, like, we're here for so much more than meme coin trading. And so while we welcome it and we think that there are a lot of benefits for the ecosystem, as I mentioned, like, the end goal and the TAM actually is like global compute. And obviously, Solana is really well positioned to move all of finance on chain. It will take a long time, but we obviously think that this will all happen on Solana. And so the simple fact that some of the meme coin trading could potentially go away if pump.fun launches its own L1 doesn't change what that end goal is, which is basically global compute and finance on NASDAQ on chain. So would not change it, no.
And I want to sort of offer you the floor here, Brian. Do you have any sort of final words, thoughts you'd like to share with us, whether it's on treasury plays, whether it's on Sol as an underlying asset, some of the volatility that we touched on, or this launchpad drama as well? Any final thoughts for us?
I would just say that, yeah, I'd encourage folks to get as educated as possible on digital asset treasury companies. If you go to ir.upexi.com, that's our IR website, we actually have a presentation which acts as sort of like a primer. You can find out more about Upexi and what differentiates us from our peers as well. Yeah, I think there's a lot of misunderstanding out there. Really appreciate you having me on, and hopefully it can help clear up some of that misunderstanding. But yeah, I'd encourage folks to become educated on this model and why it could be a good investment for them, and why it has a lot of benefits for Solana itself as well.
Absolutely. Thank you so much for your time today, Brian. Really appreciate it, and hopefully catch up very soon.
Sounds wonderful. Thank you so much.